So should investors still expect another strong year ahead? Well, joining us now is Unlimited CEO and CIO, Bob Elliott. Bob, it's great to have you on. Actually, I want to start right there with that B of A survey, because as Mike Santoli has pointed out many times before, when you see this much optimism in a survey like this, it tends to be a contrarian indicator. Your thoughts?
Well, one of my favorite parts about that survey is highlighting that essentially all bears are dead in the market. When you look at the question about what sort of landing we're going to have, only 3% of respondents said that we were going to have a hard landing in 2026, the lowest in 3 years. And that's happening just at a time, the same day when the data is coming out for the U.S. economy that shows that after some optimism over the summer, we're starting to really reinforce the weakness, whether it be in spending or employment, as we entered the fall. And so that's quite the contrast between the optimism of those fund managers and the reality, the cold, hard reality of the data that we're seeing.
So what do you think of the cold, hard reality of the data we're seeing? Like, how much stock do you put into that? A little bit of pun intended.
Well, I think the economy has been slowing for a while, and I think there's a lot of hope in the market, particularly over the summer when we saw a pickup in household spending after the tariffs were at least brought down to some extent. But all those hopes are now basically dashed as we get this data into the fall, with retail sales basically flat for a couple of months. And I think probably even more concerning for those of us who stare at the timely spending data, like the credit card data, we're actually seeing some indications that this holiday season spending might actually be below where it was last year, which would be quite weak in any reasonable context. And so you look at that picture and you say to yourself, this is probably not the time to be bulled up on stocks, and it may be the time to add some fixed income to your portfolio as you wrap up the year.
Bob, what particular data is giving you that impression about holiday? I had seen still expectations that 5+% growth in holiday season spending was in the cards. Is that tilted one way or another? Do you think that's absolutely not panning out? Does it have to do with the short season?
Well, I think you could look at, for instance, the Chase card spending data, which really gives you, day versus day matching of spending this year versus last year. And what you see on a cumulative basis is basically really since mid-November, the spending dynamics that have existed over the course of the last month are very, very soft. And that's confirmed by when you look at the Bank of America timely spending data that they publish in their consumer checkpoint. And so you put those two things together between Chase cards and Bank of America, you've got a significant majority of overall spending in the economy from households. And you see those two reads and you say to yourself, those look pretty weak. Those are not the sort of reads that would align with a strong holiday season or consumers really, getting fired up about the first quarter.
We're expecting some stimulus, though, in the first half of the year, in effect anyway. Do the effects of a slower holiday season perhaps get masked by that and therefore the market impact as well?
Yeah, I think one of the challenges is we're going to have a couple of big cross-cutting forces early in the year. For many folks, particularly those with lower incomes, they're going to see significant increases in healthcare-related costs, and that is almost a one-for-one drag in terms of their spending. And months later, there may be some pickup in refund checks, though, of course, the vast majority of that is going to be received by high-income earners. And so you sort of put those things together, and I think there's a lot of hope in the market right now that that the first quarter of the year is going to be very positive, but it may well be a false dawn that's coming with a lot of hope relative to the reality of just the last 6 months. Every time we've looked at the labor market, it's gotten a bit weaker. If we get another 6 months of that, it's going to be quite a challenging circumstance for the economy.